Did you know that a market maker, the one who controls the market, deliberately creates traps on the chart, deceiving crowds of novice traders? I will show you the 3 situations that look like perfect entries but are actually guaranteed losses. After watching this, you will stop giving money to the market. Let's go. I'll show you real examples. First, I want to say that all the chart examples you will see in this video will be taken from TradingView. However, you can conduct the same analysis on Pocket Option. Let's get started. Now let's delve into the most common market maker trap known as a false breakout. First, I'd like to draw the structure of this situation so that you can better understand it. Most often, a false breakout looks like this. We have a certain level of resistance, a certain level of support, and the price sharply breaks through one of these levels, but there is no continuation of movement, and the price instantly returns to the range area. On the chart, we can see a similar situation here. A certain level of resistance was formed, there was a false breakout, and the price immediately returned within the boundaries of that level. To avoid failing for false breakouts, all you need to do is open trades only after the final formation of the candle as soon as we have a breakout. That's all. In fact, recognizing a false breakout and profiting from it is very simple. Yet, novice traders continue to lose money on this. Let's move on to practice and examine what a true breakout and false one look like. So for the GBP currency pair, let's try to determine what kind of breakout is likely to occur here. First of all, I see that there have been a large number of retracement movements from this level. So this indicates that the level is strong and that there is a significant amount of money, liquidity, within it that the market maker will likely take advantage of. We conclude that a breakout is likely to occur, but we need to determine whether it will be false or true. To determine whether it is false or true breakout, I will repeat, we need to wait for the final formation of the candle during a proper breakout. As we can see, the candle has fully formed. First, it has settled below the level. Accordingly, a certain breakout has already occurred. Secondly, it is not impulsive. It doesn't have large wicks and no impulsively increased volume. So, for the GBP currency pair, the payout percentage is low, but that's okay. I'm opening a position for a downward movement. In this case, the breakout turned out to be true. Therefore, I expect downward movement. Now let's talk about liquidity. I use this term while analyzing situation. However, some of you may not be familiar with it yet. Liquidity, if explained in very simple terms, is all the money that exists in the market of any given time. At any given time. Most often, this money is formed by ordinary market participants, buyers and sellers, or traders like us. But most traders actually trade using support and resistance levels. Accordingly, a large amount of liquidity accumulates behind them, and it acts as magnet for price. By the way, this is exactly what the market markers hunt for. We will discuss who they are a bit later. As we can see, we had a great downward movement here. I worked with a real breakout. I also highly recommend joining my Telegram channel. There you will find access to a bot that analyzes over 30 assets and provides signals on them. If you're a beginner in binary options, this is an excellent solution. So I see an interesting situation for me. We wait for the candle to close, and so we did have what is called a false breakout. The candle closed in an interesting manner. I'm rushing to open a trade. Well, $300 for 1 minute on a downward movement. My position is open. Let's analyze the situation in more detail. Let's start with the candle after which I opened my position. I waited for the closure of this candle. And what did we see here? We saw a sharp formation of a large upper wick, which indicates strong resistance from sellers. This in turn points to a false breakout. In addition, if we switch to a 5-minute time frame and zoom out on the chart, we can see the level from which I decided to enter. This is a very strong level since it was formed a long time ago. and there has already been a very impulsive retracement from it. This in turn indicates the strength of the level and that there is definitely a lot of liquidity within it. Just look at how impulsively the price returned to the boundaries of this level right now. I believe that the situation of the first breakout has fully played out. We have already discussed the true breakout, which needs to properly execute it, and the first breakout, which is important to distinguish correctly and also to trade accordingly. Let's move on. The next trap I would like to consider involves very impulsive price movements. You have probably seen situations like this, where just one candle completely engulfed almost everything that was formed before its creation. Most often, such candles are formed during news fluctuations, and market makers love to take advantage of this because with just one candle, they can cover the liquidity that was formed up that moment but had not yet been removed. And this is just a small part of what market makers can do. So after news events, we often see a sudden sideways movement. Within the sideways movement, I generally don't recommend trading because it is essentially created only to gather the necessary liquidity for an upward move. We will talk more about liquidity gathering situation a bit later. However, to avoid falling into the market maker's trap associated with impulsive price fluctuations, you simply need to refrain from trading at moments when you see such candles. Even better, it's advisable to occasionally check the news section on TradingView. It is located for each currency pair in the lower right corner of the screen. Let's move on. Finally, the last market maker trap I want to discuss in this video is what I call liquidity accumulation. This is a situation on the market where the market frequently tests the same level. The mistake traders make is that they hold on too long in their belief in the strength of this level. Meanwhile, the market maker doesn't yet allow liquidity to be collected. Instead, they are accumulating it. The longer a level persists, the more liquidity accumulates within it. Remember, no level will last long enough. Sooner or later, a level will be broken and the liquidity behind it will be removed. To distinguish which level has already outlived its usefulness, it is very important to understand the strength of the level. A truly strong level from which we expect to trade retracements in the future should have good retracement movements in history. For example, these ones. However, if we see that during a retracement a certain staircase pattern begins to form, where the distance from the level to the current price position constantly changes, as in this chart, this indicates weakness in this level, and that price is currently being manipulated and pushed toward the level intentionally. This doesn't resemble an ordinary breakout at all. During an ordinary breakout, strong accumulation typically does not occur within their area. Keep this in mind. In conclusion, I don't recommend trading in such situations, as there is a high risk of losing your money. Right now, I see a very similar situation to the trap I mentioned earlier. We have a certain resistance level in this area. There have been a large number of retracement movements from it. It seems that the level is strong. However, if we look closely, we can see that initially we did have some decent retracement movements. Even at this moment, we had something relatively normal. However, over time, each approach of the price to the level has decreased the distance from the price to the values of this level. In this situation, I will definitely not enter a trade, as there is a possibility of a sharp breakout of this level, after which it is unknown what would happen. It could be a false breakout, or it could continue moving forward. Let me find a good situation to work with right now, after which I will open a final trade using all the new knowledge. I will try not to fall into any traps set by the market makers. So let's work on another position. I think I will use classic trading from level to level on breakouts, or conversely on retracements. Right now, I see a breakout of the resistance level on the U or GPY currency pair. The candle is in favor of buyers. However, right now we have formed a very large wick as soon as the price broke this level. The wick is relatively small compared to the candle, so this breakout cannot be considered false in any way. The payout percentage is small, but in this situation, I am confident. 387 for an upward movement. The position is open. Finally, let me explain who a market maker is and what they do. A market maker is a large player in the market whose job is to create a balance between supply and demand. All this is done so that any investor or trader can buy, sell, and open their position on a particular asset as quickly as possible and without market fluctuations. But to achieve this, proper liquidity distribution is needed, which is what the market maker does. From this, we can conclude that all market maker traps are commonplace in the market. Therefore, it is important to understand that while the market is cyclical, it is not perfect. The trade closing profit, a small upward movement occurred, and let's summarize. In this video, we touch on a very important topic that concerns not only your deposit but the entire market as a whole. I am surprised that many people ignore this, not giving it much importance. However, understanding market process will also lead to you to success. Thank you all for watching. I hope this video was helpful to you. Don't forget to join my Telegram channel via the link in the description. And goodbye, everyone.